Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Wednesday, November 25th, 2015, and this is the Daily Report for Gold and Silver. As we are on the eve of a 4-day weekend here in the United States for Thanksgiving, of course, we do have the markets quieting down. We're not getting the volatility, but we are certainly getting the compressed range. Gold is trading off today roughly by about $5, $10.70 and change. But if you look at the range between the low at 68 and the high at 80, you've got roughly a $12 range, and we're sitting about $2 off of the low. Now, that is the only precious metal today that is trading lower, with palladium trading up almost 2% on the day, $10 plus gain at $5.51. You also have silver trading nominally higher, up about 3 cents at $14.18 and change. And lastly, platinum also trading nominally higher at $842.40. So as we take a look at gold this morning, there's absolutely no doubt we're certainly under pressure in gold. I want to look at a couple of charts, though, that have basically some mixed signals. The first one is this daily chart, and I draw your attention to the MACD, Moving Average Convergence Divergence. And what we can see is that our fast line has crossed over our slower line, and that is typically a trigger or a signal that we could be looking at higher pricing. When we look at the momentum in the MACD, you can see that it has gone from negative and negative in a fairly strong manner up to today's print, which is actually our first positive print. And that, by any stretch of the imagination, could be construed as a fairly bullish sign in the market. But there are other studies that aren't so rosy. And I draw your attention to this daily chart, standard candlestick format again. But what we have here is basically a channel line. This, of course, being a bear channel, upper end of the channel, lower end of the channel. And the one thing that we can say about this is that the market has been absolutely in a downward bias. Not rocket science to figure that out, but if we look at these channel lines, you can see that we truly came to the bottom of the channel, and then over this last couple of weeks of trading almost sideways, but we are now, as you can see, at the top of this channel, which would predicate, based upon this study at least, that we'll probably see some weakness come into the market and trade back to the lower end of the channel if it's going to maintain this kind of a bearish stance. The other thing that I have been looking at, and we touched upon this a little bit yesterday, especially in regards to silver, and that was the dramatic sell-off that we saw in silver following the Thanksgiving long 4-day weekend, in which we saw this market come under dramatic pressure. Now, what I've done is simply put a line into the beginning of November for 2013, beginning of November for 2014. We can see that in 2013, beginning of November, this is our third week, and so this would be following Thanksgiving holiday. It did trade to a lower low, but it was on a defined downtrend, so we didn't really see any real spike in the market to the downside. If we look at last year's activity, of course, this being November, first 3 weeks take us here. This is the dramatic spike that we saw last November, just following Thanksgiving. And of course, now that we look at, and again, this is a weekly chart, we are now in November, and this is looking a little bit more like what we saw in 2013. In other words, we already had a defined downtrend. You can see that right in here. And so my question is, because of the liquidity eroding or drying up from the market and the opportunity for there to be some increased volatility, what does that mean for the market? I'm certainly not looking for a scenario like what we saw last year, and silver was really the one particular market that got crunched the worst. When we looked at this yesterday, let's go ahead and kind of take a quick look at it again. If we look at November of last year, and so of course we've got the third Thursday being Thanksgiving each year. So 1, 2, 3. You can see that this market traded at a high of just above 1650, call it 1670, and then traded to a low of just about $14 per ounce. So we had a tremendous drop in the market, but it did recoup throughout the week and actually closed in solid territory. But nonetheless, we had an extreme amount of volatility that came in on the Monday following Thanksgiving weekend. So it's certainly something that we want to pay attention to. And as we come up to the eve of Thanksgiving here in the United States, I want to wish all of our subscribers happiness and a lot to be thankful for. And on that note, I say, this is Gary Wagner wishing you a happy Thanksgiving wherever you might live in the world. We'll talk to you on Friday for a shortened edition of the gold forecast and trending markets, and for a full edition, of course, back on Monday. Have a great Thanksgiving holiday for those that celebrate it. Bye-bye.